Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Remember, disclaimers below. Nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. Uh, I'm not a financial advisor, so let's get into today's stuff. I want to take just a little victory lap on two things that I talked about. I didn't really emphasize, but I talked about. If you follow my channel, one is I was telling you about when my in-laws came and this is a couple of months ago, and how they said that the Chinese electric vehicles are way better than the US vehicles. Now, you heard it on my channel first, but look at it right here. Elon Musk Tesla loses EV crown to Chinese rival after 1 year. So you can see right here, lost its crown top electric vehicle maker after second straight year of falling sales. Now they blamed expiring US tax credit overseas. So Chinese sold 2.26 million. Now, I mean, as I said, we have dumb people running our, private sector, not just our government, but our private sector and right here in America. And this is why, and you're starting to see the results. It's not lack of skilled workers that's hurting. In fact, if you look at human capital, the United States is one of the biggest. Let me see if I can find this real quick. Has more human capital than basically almost any country. We're one of the top ones in it, but we just have bad leaders, so that's why our workforce. I'm not even saying this to be populist or anything. It's just a fact. You're seeing it here with the electric vehicles that we're starting to lose that. Uh, Let me see. I'm just looking at. So obviously, even if they don't have skills, they have the potential. Right here. Right here. So, I mean, we don't need a lot of these visas and everything. But if you look at it right here, human capital ranked 17th out of 193. So there it is. I wonder if there actually is the rankings. But so this whole notion, it's nonsense. Uh, I mean, Singapore is number one, Hong Kong, Japan, Canada. If you look at it, it's a lot of small countries, but if you look at it, where most of our Poland's high. Well, if you look at where most of the visas and everything are coming, they're actually lower on the human capital index. So obviously, there's more. A lot of it's different. So there you go. I mean, got Elon Musk. I'll do that later. Another thing I said was, if you want to run a business, lower those margins now. Lower those margins. The days of high margin products are over. Whether you like it or not, people are very mad about these high prices. And if you don't want socialism coming to the US, lower those margins because just based on human behavior, I'm not advocating or not, but it's possible French Revolution style. But Verizon CEO openly admits self-inflicted price hikes. 13,000 jobs. I've done this. I've been in businesses in a bear market. So even if you have experience in a business, I'm probably not as much because I had to be in the precious metals business during the bear market during of 2012 to 2015. The first thing I said, value, price lowers, lower the margins. We got to get people to come to the table. We got to give them an offer they can't refuse because they're not going to want to sell. They don't want to. They don't want to buy. I mean, they're not going to want to buy. They're not going to want to buy. They're not going to want to buy in a bear market. They're worried about money. They're worried about finances. You got to give them good offers and good deals. And that's the new thing. And so Verizon, they actually raised prices because they wanted, instead of, doing the smart thing is eating the cost. Uh, I mean, you got to pass some over the consumer, but you can't pass it all. Sorry, you have to lower margins now. And these businesses, like they can just fund the right candidates, fund deflationists. Yeah, they want to be able to expand their margins again. Fund deflationists, costs will come down. But yeah, self-employed 13,000, not doing well. Uh, so let me see. I should, Popeyes also has gone out of business, has declared bankruptcies. And look at this. Everyone thinks, high margins, at least on the Wall Street. But I was actually looking at this. Retail like Amazon and Walmart operate on razor thin margins. Those are most popular because when you lower the you make it up on volume. So there you go. And if you look at it, smart comp Nike, Cracker Barrel, they learned. So the other thing too, I just wanted to get on. I saw this. Then I'll get in the markets, but New York Treasury Securities Operational Committee, and this goes to show. I just saw it, but QE's back, and this is actually the New York Fed that's doing this. It's not the Fed. So FOMC directed the Open Market Committee, the Federal Reserve Bank of New York, to increase its SOMA securities holdings through purchases of Treasury bills and, if needed, other Treasury securities with maturities of 3 years or less. So they're probably trying to go after short-term interest rates. So that's probably what they're going for right now. And so you can look at it. The first one starts. This is 19th, but tomorrow, maybe the day you're listening to this, bill of 1 to 4 months, 8 billion. Then there's another one on the 22nd, 26th, 29th, second, and then it ends February 10th. But this is around, I think this is around 55 billion. So if you actually look at it, I'm actually going to go on my phone real quick and just add them all real quick. 8.306, 6.920, 8.304 plus 8.304, 6.921 plus 8.304 plus 8.304. Yeah, it's like around 55.363 billion. So it's 3.36 billion. That will be injected into the markets. This is probably done to do a crash. And one thing I want to follow up on, let's go on gold. I think gold, it's in a bull market. I've seen a lot of different things. Like, I think I have one more up run. I think deflation is going to come. It's down as we speak it. I think the cost of living is becoming, you're starting to see it with even the upper class. They can't afford these price hikes. So I think they'll eventually. Now, I think after that, there'll be a couple of years, but I do think next decade is when silver goes to outrageous stuff and gold. But I think there'll be an opportunity to sell. But it's one more upswing, and who knows where it is. I think it'll break 100, and then that's when you'll start to really want to get out. But if you look at it, silver at 94. Gold's at 4,667. I said it, there's a big buyer, so it has more room to run because there is a big buyer in this market and it's just coming. I don't care what they say about the margin requirements. The big buyer is coming up. Uh, Let me look at, I'm gonna go to oilprice.com. This is this thing is I'm an investor. I'm not a trader. And right now, WTI is at 59. Brent crude, which is the North Sea in Europe, that's at 63. If you're going to start either slow accumulation, this is what I did. You slowly just buy a little bits each time for a year or two. I think crude's going to start going up this year, but or you want to just start buying something hands over fist. I would say oil stocks. I would say Canadian oil stocks because they're the ones hated. But look at oil's at 59, 63. And this is where I think the next QE is going to go. This is where I think you should be buying. I've been buying myself. I'm not a financial investment advisor, but everything else, gold and silver, I think the days of investing, buying hands over fist, in my opinion, those days are over. I would look at, solely as a trading vehicle. If you want to trade, it's fine, but the days of putting large amounts of capital. If you listen to my channel, I was pounding the table from 2022 and 2023 that gold's going to make a move. And I even said, someone even asked me, I said, you got to make your own decisions. You can lose your job or whatnot. And it went further than even I realized, but I said this was the time to invest. And of course, what happens? Narrative follows price. I don't think it's the time to invest because the price is not. It's not cheap anymore. And so I think gold. So my opinion is, if you just came to this channel and you're wondering, uh, where's the cheap opportunity to invest? I mean, I would say oil right now. I would say, and what this is what I'm doing. I'm not going to give advice. I'm buying oil stocks now, not as much as I can because I am buying a house next year overseas. I'm moving there for good, but that is not an investment. That is a place where I'm going to live for the rest of my life, and I will never leave that house. My daughter's going to grow up there. Hopefully, I have another kid, and that kid will grow up there. I'm not having any more than two. I'm too old. Uh, and my wife will grow up there. Hopefully, we'll die there. And I don't look at that as an investment. Cool thing about Poland, I will see if I can tell you real quick. Look at this. This is so cool. Look at this. Poland's properties local segment. Look at it. It is done. There's no appraisal. It's not like everything else. It's per square meter. It's like 1.1 lati, 1.25 Polish zloty per square meter. And oh yeah, like kind exchange. I don't remember that. Let me see the most. Like I remember I looking at things. The most people pay is like, look at this. This is not a joke. 125 annually. Yeah, enjoy your $40,000 tax bill, Americans. Yeah, I pay $125 zloty dollars, whatever. So yeah, pretty sweet. Don't you wish we had that in America? Don't you wish your tax bill was only $125 a year instead of let's see, average property tax in America per year. Now, obviously, it varies state to state, but yeah, look at that. 42,000. Look at that. Medium 2,000 to 3,000. Of course, it's significant state to state. Poland's like 127. So anyway, let's go to gold. I think at least this is probably going to 5,000. My opinion on gold is It hasn't changed. Bullion is for the rich. Ooh, I'm sort of running out of battery. Bullion's for the rich. And so I think oil, this is where I'm investing money, and I think this is the only place anyone should invest money in. I do Canadian energy majors and dividend paying stocks. That's it. I'm not into the juniors for now or anything. Gold. Now, I think we're going to get to a point where you're going to have the everything, where no matter where you go, you're running into a fire. And so I think people should have some bullion because even if you have the safest backs, you're probably it could still go under. And so at least with gold, you're not going to lose purchasing power. It has no counterparty risk. Like what's one bank I got? I don't think it will go under anytime soon. I'll just say it's Applied Bank. It's in Rehoboth Beach. But the thing is, when the Treasury market defaults start coming, a lot of people from the Mid Atlantic, that area that get off the government largesse, who are doing well financially now, they're going to start losing their jobs, their incomes, and their everything else. And then all of a sudden, there's a lot of liabilities. The vacation areas are no longer there. And so that might actually end up going under, even though it's very safe and incredibly well capitalized right now. So that's why I think I'm just using that. But gold, I think it's going to go to 5,000. It's gone up drastically. Obviously, it's going to correct overnight. Silver's at 93. I think it will go to 100 and break, and then I'll probably start buying so I can actually buy some property soon. But oil, I mean, you hear all about the supply glut and everything else. If you look at it, a lot more petroleum cars are coming back. EV is expired. I think we're going to see a lot more. I think oil. And the other thing about oil, if you look at this, everyone wants to know when's the highest oil price in '08. When to know when the market might start correcting. Highest mark 147. We all know what happened in '08. 2011 was the first real stock market crash and correction. Highest price in 11 was Brent was 125, and then $100 barrel in New York trading over. So let's just see. I don't think 12 had much. WTI almost 110. 2013, this is when the stock market really started to move. Uh, quiet year. But the other thing is 2022 was not a good year for stocks. And if you actually look at WTI, West Texas, that touched over $130 a barrel. So when oil goes up, that's when the market. So I don't see the stock market having any trouble. I mean, I think it will go down, but this is when I think it's going to break. And I mean significant losses. So they're doing QE because why are they doing QE? Dow futures. You look at it, that was down. Oh, here it is. Dow futures. Oh, and that's why they're doing it. So, anyway, remember, these are all just my opinions. Not investment advice. Not investment advice, just my opinions, my thoughts on the market. Make sure every decision's yours. Do not base on anything. When I say oil, it doesn't mean I recommend you to do it. This is just what I'm doing. And it's the only place I think it's investable. I do not think I'm not gonna tell you what to do or act like I know better. I've done pretty well. Uh, it took me a long time to learn, but finding undercover assets. I'm up on my daughter's dividend stock. I'm up 15% on per oil dividends, and I'm up good amount on. I would say I'm up like 11 on mine. Oil. Remember, oil prices have been falling, so you gotta know what you're doing. I'm a stock picker. Most people aren't. The stock picking and all that. I might do a newsletter service soon. I'm not talking here because I might charge for a service on that. But right now, I'm not even that bullish. I'm worried about the everything bear market, and that's why I haven't even opened up, and I just don't have time. A service because I don't want to do a stock picking newsletter, and then there's not a 5-10 year horizon coming along and where we can just make incredible money. I think deflation is going to start creeping up soon. Like, look at the economy. You can't even hide it. Like, no one thinks the economy is good, even the normies. Like, they can't even pretend it's good anymore. Like, they always did. Barack Obama did. Trump, number one, his first term. But ever since 2020, they can't pretend it. And they have to see meaningful gains, and that's not going to happen. So, anyway, remember, non-investment advice, my opinions. I will see you next video. And read the disclaimers below.